Michael Saylor, Strategy Executive Chairman, joins Squawk Box to discuss the company's quarterly earnings results, the company's Bitcoin stockpile, state of crypto, and more.
Shares of the world's largest corporate holder of Bitcoin lower this morning. MicroStrategy is now known as simply as Strategy, reported its best quarterly profit ever, well above the loss that analysts were expecting, reversing the year-ago loss. The company now holds more than 600,000 Bitcoins. Join us now, Michael Saylor, the company's executive chairman. 3% of all the Bitcoins that will ever be minted, 628,791 owned by Strategy, but who's counting?
Yeah, thanks for noticing. We see Bitcoin as digital capital. The business model of the company is to accumulate the digital capital and then issue digital credit, like preferred stocks, against that digital capital in order to strip the volatility and the risk off of the Bitcoin and provide yield to investors.
And the latest preferred stock offering, it was going to be $500 million, and why not do $2.5 billion? So 5 times as much because of demand?
You know, my first IPO was $48 million in 1998. This year we did 4 IPOs for a total of about the first was $500 million, $500 million, $1 billion, and this is the largest IPO of the year, $2.5 billion.
Like the tie, do you have? Are they all orange now? Mostly.
We only wear orange ties.
You only wear orange ties because I went to D.C. and didn't think about it and wore an orange tie. Every single person thought I was like advertising Bitcoin, and on I had a picture that I put out, and on Twitter I'm supposedly a holder. And it's dangerous to do that unless you're Michael Saylor. I'll just say that.
The future is orange, Joe.
Unless it's Halloween, my wife's birthday. So these numbers were staggering me. It's very arcane, very hard to understand. Are you basically just a leveraged acquirer of Bitcoin, and that's what your company is?
Here's the way to think of it. Bitcoin is a digital commodity. It's about 50 volatility, 50 ARR, and you want to hold it forever, a 50-year duration asset.
Okay.
If you want amplified Bitcoin, MSTR, the equity, is amplified Bitcoin. People want 2x Bitcoin exposure. The options jockeys love this. The derivatives traders love this. If you want structured Bitcoin, that's Strike, STRK. We give you like the 80% of the upside, and we give you 20% in a structured dividend, and then we give you principal protection. That's for people that would prefer to invest in hedge funds or S&P indexes.
But you're using the proceeds to buy more Bitcoin. You just keep adding on to how much Bitcoin you have. And your average price is what, 73,000?
Yeah, we'll sell a credit instrument like Strike, and we'll buy Bitcoin. So we're taking the volatility and the duration and the upside for our equity investors, and we're giving a structured instrument to the credit investors. Now, Stretch, which is our latest IPO, and I think the most exciting product, it's like treasury Bitcoin. It's for someone that wants monthly dividend, they want principal protection, they want the lowest volatility, they want a high yield savings account, and it kind of competes with money markets or with treasuries. And so what the company has done is we're taking this pure digital capital asset that's got a lot of performance but a lot of volatility, and we're refining it into securities that conventional investors can buy depending upon their risk tolerance and their duration interest.
Is there ever too much Bitcoin for you to own? Like if you could own all of it, would you?
I don't think we'll get all of it. I don't think in the range of 3 to 5 or 3 to 7% is too much. BlackRock has got more than
I
us.
just wonder. I was thinking about the mental exercise of if you could actually own all of it, like if you would even, bless you, if you would want it.
Well, we started and we had very little, and Bitcoin was 10,000, and now Bitcoin's more than 100,000, and 97% of the Bitcoin is worth 10 times as much, and somebody else, not us, has it.
Right.
So as a practical matter, what we're doing is we're monetizing and powering up this.
I totally get it. I just mean, if
world.
you owned all of it, would that change the entire behavior of Bitcoin?
Yeah, we wouldn't want to own all of it.
I wouldn't want to.
We want everybody else to have their piece.
Too.
The nice thing there is there's 160 companies that are capitalizing on Bitcoin in the public market, up from about 60 last year. So the Bitcoin treasury movement's exploding. And companies like MetaPlanet in Japan and Capital B in France and Smarter Web in the UK, and then There's a raft of them in the U.S., Anthony Pompliano's company, and 21. They're all capitalizing. The big idea is I take digital capital, I issue digital credit, and a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us.
Sort of a philosophical question about treasuries, actually. And I don't know how much you believe in U.S. dollars these days. But the question is, if you believe that corporations, if you believe one day Warren Buffett, instead of holding
well, 300, maybe not Warren Buffett.
What?
Maybe not Warren.
Well, instead of holding $300 billion of treasuries,
calls it rat poison.
He would hold
$60 billion.
It's not going to be Warren Buffett.
He would hold, that all these companies, instead of holding cash or treasuries, they would all hold their money in Bitcoin. If that were true, what would that do to the U.S. government and its ability to operate?
Well, I think the key to keep in mind is Bitcoin is demonetizing foreign real estate, private equity, public equity, other sorts of store of value assets everywhere in the world. 20th century physical analog assets are becoming 21st century digital assets. These companies like Apple and Microsoft, if they could buy the S&P index, they'd be better off. It's against SEC rules.
Right.
If they could buy each other's securities, if the Mag 7 could buy each other's securities, they would be better off. That's against SEC rules. The only security Apple can buy is Apple stock. And what do? They buy their own security. So